If you did not watch the previous video, then this video is of no use to you, and I encourage you to go and watch the previous video first so you will understand this one. All right, because I don't want people to then start asking questions in comments or sending me text messages. I don't have a problem with that, but if you want to understand this video, I want you to go and watch the previous one first, then you will know what I'm talking about on this one. All right. So I want you to stop thinking that you need to trade every single day. This is one thing that has destroyed a lot of us, thinking that every single day I'm supposed to find a setup, I'm supposed to find something to trade. Every single hour, if I look at the charts, I'm supposed to find something to trade. That is where some of you you make a problem. All right, I've told you several times, if you need to be able to trade, at least get to trade three or 4 times a week. All right, so that means probably maybe Tuesday, Wednesday, and Thursday only. You need to be selective when it comes to trading. But this is not what I'm here for today. Today we are going to be talking more about what we were talking about on the previous video. So I'm gonna throw in a link above. Please go to that video if you didn't watch it, but if you have watched it, then let's continue with this one. So we have what we call London patterns. All right, we have what we call London patterns. So I'm just gonna deal with London patterns here, and then I will try and show you the difference between these patterns and how for you to know when and where these patterns are going to appear. Now, so we've got 3 types of London patterns, and we have London pattern type 1, and then we have London pattern type 2, and then we have London pattern type 3. So this is gonna be type 1, this is gonna be type 2, and then this is going to be type 3. All right, so what happens, it all depends with the direction in which the market is moving. Okay, so I need you to listen attentively to this, then you will know when to expect market highs and lows, stop hands, and all those sort of things. Then that's when you then appreciate that there is nothing that I'm hiding from you guys. Okay, so market type 1, we are saying the market marks the high and the low of the Asian. So I've actually drawn this box to show you that the market is ranging within a box. So it's not like every morning when the market opens there's a box that prints out. The box prints out according to price. So if price hits a high at that particular time, the box prints out according to that. Then you want to see the market stop hand high, all right, and form the high of the day, and then you want to see the market move in the intended direction. Same applies when you are expecting the market to be an uptrend. You want to see the market stop hand low, and then the market move in an uptrend. For type 2, what you're expecting is the market to maintain the high of the Asian and quickly go away. Okay, please pay attention to this, all right? Because we're going to deal with knowing where these actually appear. So this is how you then tell. Type 3 is the one that I always advise people not to trade. So what happens with type 3 is it forms usually in the middle of the Asian box, or sometimes even in the the upper side of the Asian box. So I just drew the W on the other side, but I guess you still get the point, all right? So this one will be something like this. Okay. So when we talk about straightaway trades, we refer to these ones, all right? Straightaway trades, we refer to these ones. We're saying the market is a straight away trade because it did not give us a stop hand. But this one, it maintains Asian high or low. All right, it maintains Asian high or low. Okay, and then this one, it also maintains Asian high or low. This one, it stop hands above, I'll just call Asian A, above Asian high or low. All right, above Asian high or low. Okay, and then this one stop hands below Asian high or low. All right, so that is exactly how you identify these stop hands. Now you will find people then talking about the 200 EMA and all those sort of things, you know, the 50 EMA. Those are now variations around the London patterns. Those are variations around the what? The London patterns, okay? Now, type 1 will stop hand at least between 25 to 50 pips. Between 25 to 50 pips. Listen to me carefully. Between 25 to 50 pips. That's when you expect the stop hand to happen. Sometimes it might even extend to 75 pips. So that means that's an additional 15, all right? So between 25 to 50 pips, this is what you expect on on your stop hand, but it can even extend to 75 pips. Now, same applies with this one because that's the same thing. Now, type 2 will maintain the high of the Asian. Sometimes it might even sweep liquidity above here. It might grab orders or hit stops above here with the wick, but it will maintain. You'll see even the candles of the board, they will close fairly on the Asian high or low. Same applies with this one, depending with the direction of the market. Now, this one will not issue a stop hand. This one will just go up. So the kind of W, sometimes instead of having like equal legs like this, sometimes the kind of W will be one that goes out and then just goes like this, all right? And goes like that. So the kind of W where even your legs are not equal. Sometimes, maybe say this is an uptrend, it might go out and then come back and test the high of the Asian and then continue going up. Sometimes it might do that, but definitely it will not break the high or low to stop hand first. Now, what do we mean by stop hands? By stop hands, we are referring to the market hunting for stops, the market hunting for orders, the market persuading people to get into positions even if they are not ready to, and luring people into the market. The purpose of the dealer is to show you something that you know, something that you can relate with. As soon as he shows you that and you say, oh yeah, I know this, that's how he gets you. So I want you to look at this chart very carefully and memorize it. If you need to watch this video, please do. It's going to help you, because these are the things that I teach even on my mentorship class. It's not different. These are the things that I teach, but I'm giving you these things so that it will help you to sort of understand how to maneuver in the market. Okay, now to add variations, all right? So these M's and W's, or stop hands, we can then term them peak formations. All right, we're just going to type it. We can call them peak formation high or peak formation low, depending with the direction. So whatever I do with the M is the same with the W. We can call it the high of the week, the high of the month, the high of the day, yesterday's high. You can you can actually put call it a reset. You can call it anything. All right, you can call it anything. But when I say to you, here is a setup, do not trade until the dealer hits the stop. Do not trade until the dealer shows you the setup. You would realize that every time when I give you a setup, I give you a setup, and then I expect the dealer to do any of these in the chart. And I expect you to take a setup if you see these. If you do not see them, then do not take the trades, all right? Now, I advise that do not trade type 3. Reason being, type 3 is only for experienced traders, people that know what they are doing. So if you don't know what you're doing, or you are still low in terms of knowledge, I would advise you to forget anything that is a straightaway trade and focus only on type 1 and type 2. Now, when I started this video, I said, stop thinking that you need to trade every day, because you are thinking to yourself, oh yeah, but those type 1 and type 2, they don't happen every day. They are not supposed to happen every day, because if they were happening every day, then we're all going to be millionaires. They are not supposed to happen every day. And so that means you are not supposed to trade every single day. I hope this is making sense, okay? If I'm sounding as if I'm yelling, I'm trying to knock sense into your head. So get this right, and please, this is going to help you. All right, now I'm going to type the next following information, and make sure you pay close attention. All right, so London patterns. Now, where do we see London patterns? That is a very important question. So if I omit some of these, it doesn't matter. Now, London patterns, you would see them at previous day high or low. All right, previous day high or low. What we simply mean is, okay, what we simply mean is, sorry about that. What we simply mean is previous day high or low. We are saying that if we have yesterday forming an Asian box, and then all of a sudden forms an M and goes all the way down and then comes here, maybe you are expecting a peak formation, right? So your peak formation needs to stop hand to yesterday's high, all right, and give you a setup from there and then fall down. It might not reach exactly there, but you are expecting it to stop hand in that direction, okay, and then give you a setup from there and go down. So it means this will be our yesterday's high. All right, same applies with the low as well. So you expect them to push there. So that's where you expect the market to form the setup. Okay. Now, number 2, you expect these to form at 800 EMA. Okay. You expect these to form at 800 EMA. Now, what do we mean? Let's say you are coming from a peak formation and then you go all the way down to level 1 and then you go all the way down to level 2. And then you have an 800 EMA crossing over right there and you're at level 2. There are instances where the dealer will issue you that 75 pip stop hand or 50 pip stop hand and give you a setup at 800 EMA and then finish the cycle into level 3. All right, so this becomes your 2, this becomes your 1, and this becomes your 3. So that there is what you then call the London pattern type 1 happening where? At 800 EMA. Now, where else do we expect these to happen? You expect these to happen at previous high or lows. Okay? Previous high or low. What are we saying? We've got a market that is forming higher highs and lower highs as it goes up. And then it gets to this point and you're expecting the market to go up. And then the market comes here and then it forms you. All right, let me show you something that's more clear. So the market, here is the Asian box on this particular day. Remember, these are different days. Okay. The market stop hands on this particular day to the low, but it happens where? At previous days high. Okay. It's previous days high, but it is the last known high or low. Okay. Last known high or low. And then the market continues to go up. Sometimes this high, maybe there could be another high there, all right? And the market just gives you a type 3 and goes up. But that is the last high. I'm going to show you these on the chart, so do not worry yourself, okay? I'm going to show you these on the chart. But if you have watched the previous video, you should already know what I am talking about when I was showing you examples of Euro USD and AUD USD forming a previous high or low. Okay, so you have a market that is forming higher highs and lower highs while it is going up. All right. Now this market, all your pullbacks, okay? First things first, I will expect my pullback to go all the way up to there. All right. Secondly, if my pullback goes past that point, I expect it to go up to there. So already I know when and where the pullback will get to. I don't know if that makes sense. I already know where the pullback is gonna get to. All right. I'm not afraid of pullbacks because I know if it's not here, then it should be there. You get the point? All right. So you can even incorporate resistances, resistance and support also as areas you can expect these to appear as well. You can actually put resistance levels or support levels. What we simply mean, this is still the same thing as well, all right? The market comes to a point where maybe, let's say you have a cycle where there is a high there and the market was going down, all of a sudden it started going up, and then it comes to this point where you are expecting this to be a resistance, and the market gives you a setup there on that particular day, and then it goes down, all right? You're expecting the high or low of the day to appear at that point before the market shifts away. All right, so you can actually use support and resistance. Again, like I said, I respect other strategies. All right, so I'm going to talk about them. You can expect these to happen even on order blocks. All right, you can expect these to happen on order blocks. If you know about ICT and all that, then you're actually in a better position. One day I'm going to teach about these order blocks, but you can expect the market to happen at order blocks. Maybe let's say, for instance, you've got an M formation there, nice M formation, and you happen to have an order block at this point right here. All right, that maybe was the cause of the break of structure right there. The market goes down and you're expecting the market to probably give you an ID50. Maybe your 50 level is somewhere there, and then you see the market cross that 50 and go and give you an M somewhere there, and then it starts to go down. But when you look at it from the 1 hour time frame, you see I have a railroad track. All right, I have a railroad track, or you've got the morning star. All right, now it's still the same thing. All these are candlestick reversals on higher time frames, but on lower time frames you actually have a very good setup where at an order block level. Okay, so you can actually even use order blocks as well to find where those stop hands are going to happen. All right, I'm sharing this information for free, so make sure you watch this video up to the end because it's going to help you. Okay, now there is something that I've been omitting, and purposefully. Right, you can expect this to happen where at 200 EMA. All right, at 200 EMA. Now, what do we mean by that? This is where it gets interesting. All right, every time when we say one level is equal to 3 levels on M15 is equal to 1 level on H1. All right, what exactly are we referring to? Let's look at that. So the market on the first day will give you a setup. This is your day 1. This is probably your day 2. This is an uptrend. This is probably your day 3. All right, and this is probably your day 4. Okay, so you've got the market stop hunting to the low, and then what happens is they give you 1, they give you 2, and then they give you 3, they give you an M, and then they sell and end into consolidation. And the following day they give you another setup, they move 1 and they move 2, and then they end the day in consolidation. Now tell me, what do you think is gonna happen on the next day? All right, this is not magic, guys. On the next day, what's gonna happen is you're gonna have the last push, and after the last push the market will start going down. All right, and then you'll say, I think that looks like a sell. This is where you lose it on pullbacks, but no, it is not a sell. It's finishing this cycle that's coming from the previous day. It's finishing that cycle, and when that cycle is done, it will then go to what? The 200 EMA. Probably your 200 EMA is moving here. All right, your 200 EMA is moving here. So it's finished the cycle, and that's why it didn't come to the 200 EMA first, but it finished the pushes, all right, before it came for the 200 EMA. Then maybe it goes just 1 and goes 2, and it does. Tomorrow it will do the same thing again. Okay, so that's why sometimes you see that the market does not come back to the 200 EMA. The reason why then it doesn't come back to the 200 EMA, it's because it did not finish those M15 pushes. This is the reason why sometimes people will say, oh no, but the market is not coming to the 200 EMA more often. You know, there's nothing that has changed. It's simple that they did not finish the 3 pushes, or sometimes instead they decide, rather than finishing the pushes, we are going to give him a 3rd type and then continue going up, then give him the 200 EMA the following day. All right, that's also possible. So for you to then know which London type pattern is going to come, then you need to know some of this. And they are not all, but these are some of them. All right, guys, I hope this is making sense. We're going to take a break, and then after that, we are going to look at the charts briefly. And then if you still don't understand this, please let me know in the comments, and then I'll show you as much examples as I can.